All right, stock market technical analysis. Let's get right into it. If you guys are finding value, please drop me a thumbs up. Leave me a comment on maybe charts you want me to look at. I do kind of browse through the comments. And if anything looks interesting, I'll bring it up in a video. And then finally, if you're interested in the private member group, I was commenting in there today exactly what my trading plan was, how I was treating today, and what I was going to be doing. Hopefully, we get the trade right and we make money here in the near future. So let me explain what we've got going on. TripleQs. We basically, as far as I can tell, it looks like we're basically right at major resistance, and I would suspect we're going to gap down tomorrow. I don't know what economic report. I think there's an inflation reading maybe coming out, jobs, something like. I think there's a CPI maybe coming out, and in general, it seems like there's something queued up that's going to knock the market down. The market's technically set up to come lower, at least from current prices. So let me show you what I see on the daily chart of TripleQs. Again, you can see here, I'll just kind of give the bigger picture. You've got support, 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 breakdown, and a back test. All right, there's your back test. And we could go up just slightly more. I mean, there's a little bit more room for maybe a tag of that trend line, but it's not much. I mean, it's literally from where we're at. You know, I can barely even mark it out. It's like maybe 0.5% or so. So, you know, that's really it. There's about a 0.5% wiggle room. Anything above that, and it's going to start to break the technicals to where, you know, it would be bullish if you start to recover this trend line. All right, and that's possible. But as of right now, we're closing at resistance, and I think we're going to gap down. Maybe it's not tomorrow. Maybe it's sometime this week. So let me show you what else I've got. There's also this downtrend line. You can kind of see it. I've got it kind of marked out right here. You can see, and we closed close enough to where we're pretty much on it. It's not really a breakout of the downtrend line. Yes, I think it is slightly above, but it's not an impulsive breakout. Breakouts you want to see are impulsive. Let me drop down to the hourly, and you can see I've got this marked out. You can see on the hourly a couple reactions there, and we're basically just slightly above that trend line, but it's just not impulsive. It's not an impulsive breakout. So it's close enough to where we can't call that an exact breakout. And then if you go down to like the 15-minute, you can see we're starting to show some negative divergence right there on the 15-minute where momentum's starting to roll over. Really into the end of the day, it was starting to roll over here. So we have slight negative divergence. So that's really it on the TripleQs. A couple things though, if I go to the futures, let's look at the Nasdaq Futures. I have to kind of get up to, well, you can see it here on the 15-minute chart, but let me go to the daily. Okay, here's the daily, and again, you can see basically we're basically back testing resistance. We've got this downtrend line resistance, and we've got the bigger daily resistance just overhead. So again, a little more room for slight upside. I just don't think it's much. Now maybe they'll gap this thing up. It is possible to see like a big gap up in the morning and then they'll dump it. That's what I'd be looking for. So if you do see a move where they try to gap it above the trend line, I'd look for a reversal, a hard reversal on that day. It doesn't have to be there, but I definitely would be looking for that. And if you see it, that tells you that we're basically getting rejected at resistance. Okay, so futures very close. And if I narrow it down to the 5-minute chart, and I'll get to that here in a second. Actually, let me get over to the SPY real quick. Again, SPY is sell the rip. Because you have a clear break of trend. Support, SPY is very clear. You broke, back tested, failed. All right, and again, you're coming into what looks to be some decent resistance. I mean, you can see horizontal resistance right here. See these reactions. Lots of days where we held that support, kind of held it through there, several candles, and then when we broke, we gapped down. Boom. Well, all we've done over the last few week or so, after having a really impulsive sell-off and the VIX spiked quite a bit, is we've rallied now back to resistance. As I say, it's sell the rip. There's your rip. So to me, lower highs and lower lows. Now, it could pop it up here and maybe hit this trend line. That is, I could see that. I don't think you're going to get a daily close up there, but they could maybe try to close it there for a day or so. I'd give it a little bit of room because when you get really close to key levels, the market makers like to play games and run stops and, you know, kind of fake people out. So that's always possible. You got to be willing to give your levels just a little bit of wiggle room, allow for false breakdowns, false breakouts, things like that. And the SPY has rallied into resistance right now on the daily chart. If I go down to the hourly, we could, if the hourlies, this downtrend line is just not as clear on the hourly because they only have 2 reaction points, 1, 2. So it's really not a valid trend line. I marked it because I was maybe going to see if we could get a reaction there, but it's, you know, it's really, I should just take it away because it's not a valid trend line. So in general, you can see we have ramped into what was former support should now be resistance. So I'm expecting this to break. Now let's look at the futures, Nasdaq futures, and really, if you look at the smaller time frame, you have to go down to like the 15-minute or the 5 minutes. Pretty you know, good time frame. Here's the 5 minute. You can see this is today's price action, pretty much a trend day. But we did break trend actually at the end of the day. You can see the 5 minute candle just basically straight up, and then we broke right here. Now the reason I wasn't looking for a big sell-off on this breakdown because the SPY futures, the ES hadn't broken yet. So I was looking, this broke, and then what I did is once I saw this break on the 5 minute, I flipped over to the ES, the S&P 500 futures, and I was looking for this to break. Once this broke, if I saw it break today, and it didn't, but if it did, then that would have been a shorter term sell signal on, you know, pretty much the markets, but TripleQs especially because it moves quicker and more. But there's the 5 minute. So just a trend day. It held that trend line all day on the 5 minute. So what I would look for, because the Nasdaq futures has broke that little 5 minute chart, but the ES hasn't. I think this is going to break in the overnight session. It's just a guess, of course, but I think this will break in the overnight session, and then you're going to wake up to a gap down. So that's kind of what I'm looking at now. I do want to flip over to these mega cap tech stocks because these basically are the market leaders, you know. So Nvidia, we'll start here, rallying today right into resistance. It could go up a little bit more. I could see a little more upside, but look, this was a former level I had marked out. It's about 117, 116.80, basically right in there. And you can see right there is, that was former support, all right? We held that for a while right in that area. And then once we broke, we back tested it. We were rejected, and we're coming in for another back test, okay? So I think it stands to, you know, I think it's objective for this to get rejected here and to head back down, okay? At least a sell-off right there. I'd be looking at this trend line as a potential target for now because the trend line is the more major support level. That's major support on this uptrend started back in October of 2022, okay? So a pull back down to there, and that's where the buyers will be sitting. So resistance, all right, and then we go down to support. It doesn't make sense to short as we hit support. I'd want to cover, and then you wait for the break of the trend line, or if you're bullish, you can buy the support. Google, all right, rallied into resistance. You can see here basically reactions right through here. There was a gap right there. There's another reaction. There's another reaction, and we've been basically trading at this resistance level for the last 2 days. So, or really almost 3 days. So sitting at resistance on Google. Tesla, again, we broke trend. There's Tesla. You've got support, broke trend, back testing. All right, we're testing from underneath, but we're back testing, and so we're at resistance. We are below trend line. Apple has, you know, Apple kind of has this potential trend line right here. Again, it's kind of potential, and we're close enough. It's not really a breakout. We're kind of right at it. So, you know, we'll see what the after hours does. They might bring this back down in the after hours and then close it kind of right at that trend line, and then likely tomorrow gap down. So that's Apple. Microsoft, you know, very clearly, if we go down to the hourly chart on Microsoft, you can see, you know, we've got a couple reactions there. We've got 1, 2. It's not, you actually can't call it a full trend line because I only have really 2 reactions. So there we are, you know, and maybe we'll, you know, again, a little more upside, maybe not much though. I mean, again, it's so close that it doesn't make sense to try to grind out that last little bit. I mean, I only see about 0.5% maybe to the upside in Microsoft before it hits that trend line, and then likely going to get rejected. And then if you look at the daily chart, it's pretty much right there. So again, rallying into resistance. Now, if we, again, this one, I don't love this trend line. So, because there's only 2 data points. So I'm not going to be focused completely on that one. Meta, you can see here, rallying into resistance on the daily chart, right? Resistance, popped that one briefly, but look, held it there, right there again. So at resistance on the daily. So again, last Monday, we went long in the market when we gapped down huge, all right, rallied it up, and then as we started to get near the highs, I closed out my longs and have been building a short position over the last couple of days. Because you never know where you're going to see the hard turn, and it doesn't really make sense usually to, at a key level, just all in short. Sometimes it does, but you're usually a little safer to exit a trade a little bit early and start building positions for the next trade. And that's exactly what we did. We rode the long up and then started to build a position over the last few days. About 3 days, I think, I've been building a position, adding to a short position. And I've told my public group that that's exactly what I was going to do. I told them the key levels I was looking at adding and where I'd look to stop out also. Because, if I'm wrong, I need to know when I'm wrong very early so I can stop out and lose small. So, all right, so Meta at resistance, and then Amazon. Again, Amazon on the daily, you can see support. All right, look at that. Support. Broke support on a big gap down and rallied back into resistance, back testing. So this can back test for a few days. I'm not saying it's going to, look, it might gap down tomorrow. It's really hard to call that. But I just don't think there's a lot of upside. It might just tread water and go sideways, consolidate for a little while, and then gap down here by the end of the week. I do think it's probably going to be by the end of the week. If I go to a TripleQ's weekly chart, again, you can see there's the weekly. We've been rallying. We might close the week. It is possible that you're going to close the week right around 466. Okay, on the weekly chart, that to me looks like a back test. So if maybe they want to close it right there. I don't think you're going to break out and recover that trend line. I think if anything, the most bullish scenario I can see, at least in the charts as of today, would be to close around 466.50 or so on the weekly chart. And that would be a close at resistance. And then next week, so it wouldn't be this week, it'd be next week, we'd start to see selling showing up as it rejected the trend line. So that's the most bullish scenario. That is a complete possibility. Again, 466 from where we're at now, if I look at it, it's just on the weekly chart, it's just not very much to go. You've got the upside, you've got about 1% or so on that weekly chart to get up to that potential trend line. So that's your upside, 1% upside. And then the downside to me would be, if we break down here, I think we're likely taking out those 200s and heading down to this 396. The weekly chart has a bear flag. It looks like this. I'll show you guys. The weekly chart, you've got from the highs, you have the first leg down. It's kind of A, B, C, basically. So there's your A, your B is this corrective wave, and then the C would be, if I can grab this line right here, the C would be, you break, we'll just take it from as if we do back test that trend line. And again, that sets us up for a move down, really actually down lower to about 392-ish. Okay, so the downside would be roughly, 15% or so for a downside push and a 1% potential upside. So that's a 1 to 15. The risk reward ratio is not favorable to really remain long or to take new longs for sure. If you're bullish and you think it's going to go higher and maybe even break above this trend line, then you can trail stops. But again, the pattern that I see right now and what it looks like is a break of the uptrend and a bear flag. And we're just in the flagging part of the bear flag. Okay, again, you have to kind of knock people off the bearish thought process. You got to get you know, you got to get these bears. Anybody who was bearish down at the lows down here, who was panic selling or taking a bunch of put protection, you got to get them out of the trade so that there's not, you know, so everybody thinks, oh, the bottom's in, or at least the majority of people, and you need that for that feel to get that next leg down. So that's what I see there on the weekly. Okay, another look. Again, I'm on the weekly chart. This is bigger picture stuff, but here's Eli Lilly, LLY, and this is a big component in the XLV. It might, I don't know if it's the largest, but it's definitely a momentum play. You've got support, sell signal, back test. You know, you've been back testing for the last 2 weeks. I believe this was going to get rejected. It might not get rejected this week. I don't think there's much upside though. So if anything, I think we just kind of hang out in the area over the next few days and then either get rejected this week, and you'll know it when you see it, or next week is probably likely. So again, it's objective to have a short position here because I'm at resistance and I'm at resistance. So I want to short at resistance, and then if it moves down, if we do get rejected, I don't want to be shorting into the hole is what they call it. If it's dropping and it's already dropped a bunch and I don't have a position, I've now got to chase, and that's a lot higher risk if I have to chase because they could reverse that and now I'm taking on losses. I'd much rather start entering a short position right at or near resistance, and then if it does drop, I'm profitable. And I can you know, trail my stops and ride this thing down for my profit. So that's the thesis there on that one. If I flip to the daily on this one, you can see again just back testing. All right, and let me kind of clean that up, but you can see it. It's just back testing. Yeah, it's above the trend line. You know, they pop trend lines. All right, the market makers, the algos, they know where the trend lines are at. It's very obvious, especially on very clean charts. So when it's very obvious, people take positions at those trend lines, and the market makers try to profit off, you know, try to run you out of those positions, or they try to, you know, chop it around a little bit to get people to, you know, get them out of those positions. And so again, that's expected to see, you know, to see a little recovery or whatever on the trend line. It's not a breakout. Breakouts are strong, impulsive moves. The other thing I want to point out, let's check the volume because I know we had some decreasing volume, a little bit of increasing volume today, but not a whole lot there in the SPY. And you can see we've been rallying over the last week or so, and see my volume in the back on decreasing volume. Okay, and so yeah, little increase in volume today, but still relatively low. And we have had, you know, volume's been dropping, and it's probably very similar. Yeah, and see the same for the TripleQ. So a little increase in volume. But still, we still have that trend of lower volume. Now, if we're going to sell off tomorrow or very soon, then you're probably going to see a big spike in volume because all these people who have gone long, if we gap down especially, they're going to probably start to panic sell, and we'll see a spike in volume. And that's consistent with a bear flag. You have, you know, with a bear flag, I'll just go back to the SPY to kind of highlight that. You can see here and really you got to look at the weekly almost to really highlight it. But on a bear flag, you'll see first leg down, you know, you move down, you get increasing volume. Then when you flag out, the volume decreases. And then when when you drop down again for the continuation of the bear flag, volume should increase again. Okay, so I'd be looking for all that. I'd be looking for the move down, an impulsive leg lower to complete that bear flag pattern. SPY is about 494-ish for that move, and then you look for volume to increase. JP Morgan. So JP Morgan, I did have a trend line, you know, and it's an okay trend line. They have recovered it. You can see here support. Oh, let me get rid of that. Support, and then, you know, yeah, they've recovered it for the last couple days. Not super impulsive, just kind of grinding higher. But we did trade today right into resistance right there. All right, that's a line I've had marked out. It's about 208, closing at resistance. So that's the thing. I'm seeing a lot of big things, you know, financials, healthcare, and the large cap tech stocks. Most of them pretty much all closing at resistance. So that tells me either we consolidate here and go nowhere. We don't go up, we don't go down. We just kind of chop around in a tight range. That's one option. I think the higher probability is we reject and we move lower, whether that comes in a gap down or a intra-market sell-off. That remains to be seen. Shop, I know I've covered this one. I have a very small short position here because these things, it moved really high on earnings. It did have some slight bullish divergence. So it's not my favorite short, so I'm trying to keep that one small. But I do expect if the large cap tech stock sell off, you're going to see these small tech companies sell off as well. And so Shop did break this trend line. We're trading right at the 200-day, and nothing's really changed. I mean, it's been there for the last 3 days or so. We've been kind of testing that 200-day. Haven't been able to recover it. So usually by the third, you try to test something within 3 days and you can't do it. Usually you're going to get some sort of a rejection. So we'll see on that one. Abercrombie and Fitch. I don't have a position in this one, but it did close right at resistance. Look, you got that big breakout candle on earnings right here. Just trying to clean this up. There's the big breakout candle there. And we basically closed right at the bottom of that. So that's resistance. You can see, they tried to hold that candle for a week or so. Then it gave way. They tested it from underneath, but they couldn't recover it, and it dropped. And then they've rallied it back there, but it's resistance. So from my perspective, I think we probably have seen the rally, and we're going to head lower and probably go down to the 200-day moving average. All right, and then we'll see. All right, I can't anticipate a break of the 200 yet, but to drop back down to the 200, I think that's likely. There's also support right there at 140. All right, so it'll probably look like this: drop down to 140, get a little rally, and then go back down to the 200. Okay, so to wrap things up, possibility for maybe another 0.5% to 1% upside. I think that's probable. And then I do believe we'll probably get rejected and sell off. But there's no guarantees we're going to rally up that 0.5% or 1% upside. So from my perspective, personally, I don't think it makes sense to try to stick the landing perfectly, because if you miss it, we wake up to a gap down. I don't want to be shorting into the hole. So I'd prefer, personally, just my opinion, but I'd prefer to build a short position. And as we've approached resistance, and that's what I've been doing, looking for that next leg lower. And if we drop and I get it right, then that's where I'll be looking to take profit. So that's all I got. I'm going to get the video out and wrap it up. Drop me a thumbs up. Check out the private member group. Catch you on the next one. Bye.